Well, you clicked on that puzzle piece. Will I get a 1099? You know what? What's a 1099? A lot of folks, they don't know. Okay, but let's define that first, all right? I get my board. You're starting to see this board in a lot of the puzzle pieces, but it's important. So let's take a look at this again. Okay, you've got loan balance, $300,000. You've got the deficiency, $160,000, and the market value, $140,000. The $140,000 what the house sells for. The deficiency is $160,000. This is what you owe the bank is $300,000. This area, deficiency, as I've talked about in these other puzzle pieces, is the real important area, okay? This is where you're going to be finding out what the number is for your 1099, okay? Let's define what 1099 is. When you file your taxes, you have to show your W-2 form. It shows the amount of money that you earned throughout the past year. A 1099 is doing the same thing. That's a representation of ordinary income that you've earned somewhere. Where's that somewhere? Remember I told you the bank is at $300,000 on what you owe them. They excused you from $160,000. So they're going to send you a 1099, and it says that they took a $160,000 loss, so they're expensing it back on their books. But the IRS says, well, if they expense it, then somebody had to benefit from that. Unfortunately, you and I may not look at that as a benefit, but it's phantom income is how we refer to this thing. $160,000 will come to you in the form of a 1099, and it will be stating, essentially, you need to pay taxes on that $160,000 as ordinary income. So if you have $160,000 and you're in a 30% tax bracket, that's putting you at $48,000 tax bill to the IRS. Okay, now that was really simplistic accounting there. Very simplistic, okay? But it gives you a sense of you will receive this 1099. Now, if you have a short sale, completed short sale, completed strategic default, or a foreclosure, and a lot of folks say, oh, foreclosure, I get one. Yes, you do. You're going to get a 1099 at some point in time from your lender for that deficiency, the $160,000 in our example. Okay. Now you think, oh my gosh, I can't do this again. Well, wait a second here. There are lots of different things that come into play here. First off, we have what's called a Mortgage Debt Relief Act, and that pertains to people in short sale situations, primary residence, is that portions, if not all of that deficiency, can become a non-taxable event because this law is in place right now. This law expires, by the way, at the end of 2012. All right? So you need to be real sensitive to that, because if you do this after 2012 and they don't extend, you're going to have to pay taxes on everything. So be real sensitive to your timeline here. Same with a foreclosure. Now, foreclosure doesn't apply for the Mortgage Debt Relief Act, but maybe you're insolvent. Okay, insolvency is simply a case of where your liabilities exceed your assets. There is another filing that takes place with the IRS for that. So there are a number of different ways that you could be excused from having to pay taxes on that 1099 that your bank is going to issue for that $160,000. Remember, we're calling it phantom income because you're not getting doled out $160,000. You're just getting, say, here you are, and you go, hey, where's my $160,000? That's why we call it phantom income. But you are still responsible for that. Now, here at Minor Nolan Associates, we have a number of clients that are most happy to get that 1099. Why? Because they've qualified for the Mortgage Debt Relief Act, and it becomes a non-taxable event to them. It doesn't mean they don't file. It just means it's a non-taxable event. They're not going to pay taxes on it. They're very happy about that. But what they did is we met with them, we sat down, we showed them where their exposure was, what the expectation is, and the wanting of that 1099. You know, and there's so many areas here. I'll give you an example. There are folks out there, because we're a non-recourse state here in Arizona, is that are actually have been issued a 1099 by the bank. They've had to structure a payment plan with the IRS for that $160,000 when in fact they didn't need to. They're actually paying on something that the bank should not have issued to them. Okay, Why I point that example out to you is because this 1099, once again, is very serious stuff, because we all know the IRS isn't going to go away. They're there, but there are very legal, easy ways in which you can be excused from having to pay taxes on that amount. But you don't want to start off down the road doing something and think, well, I know I'll be excused. No, no, no. Get answers to these questions up front before you start anything. You must know where you stand in your exposure to receiving the 1099 from your lender, and what that's going to imply as to what's going to happen to you on the other side with the IRS. Okay, don't be afraid of it. A lot of folks are qualifying for being excused for having that tax liability. Okay, so I know you're going to have some questions on this, because this is important stuff, but don't be afraid of it. Not at all. A lot of happy clients out there. Okay, so go ahead and give us a call, email us, contact us on Facebook. Those are the easiest or best for you. Okay, look forward to hearing from you. All right, thanks for looking at this puzzle piece. You have a nice day.